Here's Maurizio here. It is just after 3 p.m. on Tuesday, January 20th, 2026. Hope everybody's having a great day. And per usual, we're just going to jump in, take a look at some of the markets here. So make sure as we come in here, you smash that like button, subscribe to the channel. Any questions or comments, leave them down below. As I've been talking about, um, I have begun to monitor most markets now on higher time frames. I'm trying to wean myself off necessarily day trading. Uh, I've been have already gone that way with the little bit of Forex trading I do, which isn't a lot, where I'm only trading off the daily chart. And I'm even doing that with some of my stock investments, which I don't day trade stocks at all, never have, but I do tend to kind of swing trade them. I'll hold them as long as I feel like there's a trend to hold. So that's usually swing trade, but I don't day trade them. I never did. And so with futures, I'm trying to look at doing the same thing. It's been a little bit tough for me to do that, just because obviously a little bit of an impulse to trade on shorter time frames, but I am attempting to kind of train my brain to do that and look at higher time frames. So from that perspective, that's how we're going to look at this. And I'm going to combine this with commitment of traders and the COT index. I haven't talked about this in quite a while, but as you guys remember, back in the fall, we had the U.S. government shutdown, so we were not getting any COT data. Really, even though the shutdown ended back in, I guess, late November, it took weeks for the data to catch up. But we have caught back up now, and we are getting the regular weekly updates. So I feel like it's a good time maybe to look at that again. So as we go through futures, I'm going to just look at the COT index in two spots. Although what I look at is pretty much the same no matter whether I look at it here on TradingView or on the website. So let's just jump right in and we'll go up to the top here. We'll start with rice. So I mentioned the index. So there is an index. There is an indicator in TradingView called COT index, as you can see right here in the lower left corner. And what I did with this is essentially I just of course, it only shows on the week. I only have it showing on the weekly chart. This indicator will show on all time frames, but the indicator, in my opinion, is not accurate on the other time frames because it's not taking the actual change that the COT weekly. So there's no point, in my opinion, to look at this indicator on any time frame except the weekly. So you can see I only have it showing on the weekly. And the most important aspect of this is really the commercials, which is the red line. So I already turned off small speculators, which is you and I, the retail traders. And theoretically, I can just shut off large specs because they're always, almost always are going to be opposite each other. Large speculators, if I turn it back on, you can see whenever there's an extreme of one, the other one's going to be at the opposite extreme, like right here on the right side. We've got, the commercials up here and the large specs down here. And that's going to almost always be the case. And the reason for that, without getting into a big discussion on it, is just because of what these two groups of traders' goals are. Commercial traders are like the producers, the buyers, the end users, etc. of a asset, where the large speculators are just like you and I, only they put on huge positions and not just tiny little retail positions like us. But that's like your banks, hedge funds, brokerage accounts, etc. Okay? And they have a different aspect, right? They're speculating. And so, I just wanted to point that out. So for the purpose of this video, I'm going to turn off the large specs and we're going to just look at commercials. And again, only showing on the weekly chart. And again, the theory behind this, and again, nothing is 100% here, guys, but when price gets comes out of one of these, this is the extreme long position. Anything over this green line, which is 80%, is this. And by the way, I didn't touch the settings on this indicator. The upper threshold for extreme long positions, 80%. The lower threshold for extreme shorts is 20%. That's this red line. There's the green line is the 80% upper threshold. And this has basically a 6-month look back, okay, 26 weeks. You can make it 24. That's technically 6 months. Doesn't really make much difference. So, so that's the look back period. You can change this if you want. I wouldn't change these thresholds, but if you wanted to change the look back, you could. I certainly wouldn't go any longer than 26, but be very cautious on making it any lower. I find the default settings is just fine. Okay, at least for the markets I trade. All right, so the theory behind this basically is when price is in one of these extreme areas like up here, as it starts to come out of this area, so in this case, out of the extreme long position, that's when prices actually will start to rally. And I know that seems very counterintuitive, but you also have to, again, remember how commercial traders position themselves. So at this point, they've bought up all these positions, and now as retail small traders try to jump on the bandwagon and start going long, they're going to very slowly start distributing their position over time. But in the meantime, price generally will goes up. And that will, and you can see now the index is now coming down towards the extreme short position. This does not mean you should start going short. Now, it could end up being that way, but usually what that means is that as it comes into this area, from the time it comes out of the extreme long position until it starts to come out of this area again, then you should only, going by this, should only be looking for longs. So even though this is coming down into this extreme oversold area, or extreme short, I don't want to say oversold because it's not really, it's extreme short position. You're looking for longs. And then at some point this will bend. I mean, who knows? It could go on for months, but at some point this bends and starts coming out of this area. And then at that point, that's when you start looking for short positions. So the bottom line is on rice, my bias on this is to the upside. Even though this chart looks pretty bearish, my bias to this is on the long side. Okay. One sec, guys. All right, sorry about that. So that is how I read this. Now, that's the trading view indicator. If for whatever reason you don't want to use this one or you don't have trading view, that's perfectly fine. I've also mentioned about 150 times about this website, insider-week.com. And this is the rice COT index right here, right? This is the actual raw COT data, but this is the index. And you can see this looks pretty much, we're looking right over here at the extreme right end of the screen, right here. And you can see that is pretty much identical to what we see on the trading view indicator. So whichever one you want to use is fine. Again, if you don't use trading view or you don't want to use that indicator, or you just don't want to have it on your chart, perfectly fine. But if you still want to use COT, insider-week.com is a great place, free to use. Okay, so you just create an account so that you get more historical price data. You don't even actually need to create an account, but I would advise it because you get a lot more historical data, especially if you want to back test using these this COT data. Okay. Now I have talked about seasonality in the past as a second confluence, which is also available on this website under tools, seasonality. I'm not going to go into that in this video. We're just going to strictly stick to the COT data, which in my opinion is more important than seasonality. I'm not saying seasonality is not. If it has a good confluence with COT, great, but it's not necessarily needed. The COT data is, in my opinion, more important. Okay, so anyways, but for the sake of this video, I'm going to stay on the TradingView chart. But if you don't have TradingView, or again, don't want to use this indicator, the TradingView indicator, use this website. Okay, all right. So that's rice. So that's the daily, the weekly chart. Now, I've been trying to do this off the 10-hour chart. And you can see on the 10-hour chart, you can see the indicator doesn't show here because, again, it's not accurate on these lower time frames. But you can see we're starting to make higher highs, higher lows, and we are in another pullback phase here. This is the 10-hour chart. So what I would look for on this is some sort of a continuation up. We had a one candle pullback, which I'm not really a big fan of, but if we come up and, and put in like a nice engulfing bullish candle, might be a place to go long, but I'd like to see this pullback go a little bit deeper, such as what we saw on these two moves up. But either way, it does look like we're making higher highs and higher lows. That does go in line with the COT data. All right, so we'll move on to soybean oil. Again, back to the weekly chart, just to take a look at our COT. What do we see here? We see in the extreme long position coming out of that area now, right here, okay? If that's the case and this holds, right here, then what should we be looking for? We should be looking for long positions, right? Because it's coming out of this area now. These are the commercial traders again, and they were accumulating in here. And now price is finally starting to react to their accumulation. In the meantime, they'll start slowly distributing their position, which gets us down into here. But anywhere from here all the way down until it turns back out of this area at some point in the future, this, to me, suggests higher prices. All right. So on this, again, dropping to the 10-hour chart, you can see we have made this big run up. We took out market structure here. We took out this old resistance zone. We are now reacting off of this zone, but overall, this is still looking pretty bullish. What I expect now is to probably see some sort of pullback here on our shorter time frames. This is the 4-hour chart. Maybe we get a deeper pullback here. We obviously have a swing right here on the 4-hour. Okay, so as long as we hold this position, any pullback inside of this area is a buying opportunity. So again, bias on this is long. All right, so that's pretty much how simple this is. Off to soybean. Soybeans, what do we have on soybeans? Kind of the opposite, right? We've got the COT index just before Christmas, moving out of the extreme short position and heading towards extreme long. So the commercial traders were distributing and selling in here, and now they're slowly starting to accumulate again. And basically buying from, selling to all the buyers here and starting to accumulate positions. But again, this can go on for a long time. So again, on this chart, I'm essentially looking for short positions. And here on the 10-hour chart, you can see I do have this little range marked out. This was our last swing high. The only little semi-troubling thing about this is the last time it went down, it failed to put in a new low. So we have equal lows here, but still, I don't see this as being overly bullish. And so, this perhaps maybe this becomes our actual zone right here, since this one did not make a new low. You could just say, well, I'm going to take that off, and this actually becomes our range. And this pullback here is just part of this big move down. Okay. So, but either way, still looking for shorts here, and that's how I look at soybean, looking for shorts here. And maybe we'll get one here soon. I don't know. We'll see. It looks like the buyers are struggling a little bit at this level. And you can see we've been moving sideways here really since last week. This is the 4-hour chart. You can see we've had no movement here since, again, in almost a week. So, and the Heiken Ashi candles are showing us that. On the 10-hour, they're still blue, but they have big upside wicks, small bodies. Just showing you that there's no volatility and everything's kind of just moving sideways. All right. On to soybean meal. Again, following our process, back to the weekly. And what do we see on the weekly? We've come out of here. We started trading down as expected. We do have this little bend right here. But, we'll have to see when we get the update on Friday. But, you know, this might bend and then continue up, or we might see a little bit more of a pullback. I don't know. But overall, I'm still more bearish on this than bullish, just based on the COT data. And so again, off the 10-hour chart, you can see we have been making lower highs and lower lows. And so this is kind of the range. This is the 4-hour range right here. Kind of our higher time frame range sits right up here, that like the 10-hour range sitting here. But overall, this is our range in the area. And so I'll be looking for appropriate pullbacks and then resumption of the downtrend. And lastly, in corn, again, out to the weekly chart. Corn, same thing, right? Pulled out of the extreme short area, now heading up. So that would indicate to me lower prices potentially. And then we are kind of seeing that start to roll over here on the weekly chart. We go to our 10-hour chart, and there's that big drop. We came down to this previous swing and are kind of just sitting here right now. So we might get another push back to the upside. But all in all, you know, this kind of general area up here holds. Then any pullback in here, even if it goes higher, will be, you know, just a better setup for a short position. So that's what I'm looking for in corn, just based on the COT data. And we'll see how that goes and see if we can get an entry. But as you can see, based on this, guys, it's pretty mechanical. But again, the main thing is there has to be a setup. And you're not going to get setups all the time trading higher time frames. And that's been a little bit of an adjustment for me. But I am getting used to it. And it gets me to sit on my hands longer. And that's perfectly fine. Okay? So that's it. Now, you, of course, can take this data and go to shorter time frames. Use the same bias on the week that you get off the weekly COT to go and, you know, day trade it on an hourly chart. It's just obviously you're trading a little bit more noise and, you know, potentially getting caught up in, you know, a false entry in what is actually a retracement. Whereas the higher time frames will kind of quiet those things down. You will definitely not get as many entries, but when you do get one, you need to jump on it. And if you're right, it could be a really nice payday and something that you'll probably get to hold for, you know, several days anyways. All right. Now, guys, it's the same process with Forex. I'm not going to go into, you know, 20-something Forex pairs. Actually, no, excuse me. Let me take that back. I'm not using COT in Forex, but what I am doing in terms of longer time frames is trading off the higher time frames. And, you know, that's what I've been doing here. And let's see. Let me just find something here to show you. So, you know, we've been looking at yen pairs have been going up. And so you can see, you know, basically just finding a set trend. In this case, the daily chart of Swiss yen. And every time we see one of these nice pullbacks and then we get a switch over to a blue candle, that's a nice indication to go long. Now, there will be times where maybe the entry is a little early, like in here. That's fine. I discussed in the last video about correct risk management and position sizing. And one of the advantages to Forex is that you can be really, really precise on your precision, on your position size, put on micro lots. So even with a large stop loss, your risk is very small. So you can start off with a smaller position size and to allow the trade to breathe. And then once your hopefully starts to go in your favor, then you can always position a size up and move your stop loss up to like a break even or what have you. So there are techniques and strategies you can use to minimize your entry risk. But, you know, don't remember that it is a higher time frame. And so stop losses are going to be more exaggerated. So you definitely have to be, you know, be cognizant of that. All right. And if I don't see an obvious trend, then I'm not trading it. Okay. So when I look at like Euro Canadian here, for instance, you know, this is really kind of not very impressive to me. I suppose you can say we're making lower highs and lower lows here. Lower high, maybe a lower high, maybe a lower high, but it's not like back here where it was making clear steer stepping, not overlapping waves. So this is one maybe I would skip unless I was really just trying to be cute and just, throw a little bit extra risk on the table. But if it's not obvious, if you can't tell just quickly looking at it, probably not one you want to be involved with. Just picking some other ones here. So this is Euro Kiwi. To me, this looks like it's maybe starting a downtrending move. We've kind of broken structure here on the daily chart. We've kind of broken through like these levels. So now, something like this, if this is going to hold, to see some sort of pullback here, and then, especially now that we've kind of reached these previous lows, see some sort of pullback for a couple of days and then have this turn lower. So that's an example of what I'm talking about. I already showed you the yen, what's happening with a lot of the yen pairs, still involved in an uptrend. We'll see if those continue. And you can do the same thing with stocks, all right? Here is Kirby Corporation, just one I picked, right? Daily chart. Up, pull back, long, new high, pull back, go long on a bullish engulfing new high. Okay, same thing. You can look at any of these. Right, this is Toronto Dominion Bank out of Canada. Again, same thing, right? Pull back, long, new high, pull back, long, new high. Pull back, maybe another. If we get another leg up, you can see I have an alert sitting here. If this starts to break higher, I'll be notified. Right, so same type of deal, right? And this is the daily chart, Heiken Ashi candles, simply looking for a trend, waiting for a pullback, and waiting for a resumption of that trend. And as long as your market structure areas are not violated, your previous swing areas are not violated, then those trends are intact. Of course, you're welcome to go to a higher time frame, a weekly or whatever, or even the daily if you zoom out and look for areas of major support or resistance where price might run into trouble. On this stock, that would be resistance because we're in an uptrend. I don't see anything on the daily chart to the left, but let's go to the weekly. We don't have anything to really compare this to. This is taken out an all-time high back here several weeks ago, unless there's anything on the monthly. No. So we don't really have anything to compare this to. So basically with this stock, as long as it is not violating major swings, in this case, not violating any major swing lows, then we remain bullish on this, right? So that's how you, you kind of play this. And using Heiken Ashi candles, I would kind of put the last major swing somewhere down here. So as long as this area holds down here, which I know is a ways off, but still it is a valid pullback area. In my opinion, it has some structure to it, made up of several candles before it made the run up. And so as long as this holds, any pullback in here to me is a buying opportunity. So, but that's it. It's just daily chart. Heiken Ashi candles, if you want, you can use regular candlesticks. Wait for a valid pullback and a resumption. Futures market, I'm using a little bit shorter time frames, daily chart. 10-hour chart for my analysis. Weekly chart, of course, for the commitment of traders. And Forex, just using straight up daily chart trend, just like stocks. Okay, so stocks and Forex, daily chart, Heiken Ashi candles. Identify the trend, wait for a pullback, enter on a resumption, and that resumption can be a change in the Heiken Ashi candles back in the same direction, color of the trend, or if you want to use another entry signal that you like, oscillator, moving average, whatever, go for it. That's up to you. And then, you just ride these until you either hit a major support or resistance level that you're looking at, or, again, if you're using an oscillator or a moving average, some kind of signal from that. or whatever. So again, I'm not really talking about, you know, how you decide what's going to be your entry signal or your exit signal. That's beyond the scope of this video. It's just more of like what you're looking for. All right. So yeah, so that's pretty much it, guys, for today. I will be sitting patiently waiting for potential trades here in futures. And, again, right now, I would say probably my best opportunity setting up is maybe soybean meal, corn, and let's see, and soybeans. So those three are basically the ones I'm looking at the most right now, in terms of what hopefully will be a setup potentially coming this week. Rice, maybe. I'd like to see a little bit more of a pullback on rice, but I am bullish on rice, so maybe we only get a one candle pullback. I don't know. I'd like to see it go down for a couple of days anyways, but who knows. If we get a turn on this, really more bullish, solid bullish action, I would take the long base even with the one candle pullback. But I'd like to see a little bit more like what we got here. So rice is another one that's kind of on my current watch list in futures. So, but you just have to be patient and sit on your hands and wait, because these trades are not going to come along very often. But when they do, position properly, stop loss, and then pull the trigger and just let the trade go. And don't manage it too closely, because it's very possible it's going to chop around a little bit. But just leave it alone and let it do what it's got to do. All right. So anyways, guys, I'll leave it there. I hope that was helpful. Make sure you smash that like button, subscribe to the channel. Questions or comments, leave them down below. And we'll talk to you all soon. All right. Thanks.